Okay, hello everyone, and welcome to this Renew Economy webinar done in conjunction with Grid Beyond. Um, Thank you very much for attending. Looks like we've got a good crowd turning up and more people are coming in, and that's fantastic. It's a really interesting subject that we've got today, part of an energy trend series in 2026. This one's entitled Caught in the Crosswinds. And if I can probably sum it up best, it's really just about looking at the demand side of the equation rather than the supply side. We have a lot of stories about the amount of wind and solar and batteries and other things which are going into the grid, and the gas and the coal, which is either exiting or hanging around longer than it's welcome. But really, I think the focus now that we've got to about 50% renewables in our main grid is finally turning to the demand side, and how customers are viewing this, not just households, but also big business, people who have really big loads, how they think about managing their electricity costs, their electricity needs, their emissions exposure. And they've got a lot of interesting technology to deal with: on-site solar, on-site batteries, different sorts of PPAs, but more importantly, smart management tools, and also a different way of thinking about the grid. And if I can just sort of quote briefly from our blurb that we put out, and which has attracted you here today, the limitations of supply side thinking have become apparent to everyone, and regulators aiming to manage the changing landscape to consumers who are increasingly concerned about the ongoing cost of living crisis. Yet within this pressure lies opportunity. What's emerging now is a system where demand is no longer passive, it's dynamic, digital, and distributed. Flexibility is no longer a buzzword but a necessity. Assets behind the meter are becoming as central to the grid as centralised power systems. And to discuss that, we have two great speakers today: Tim Buckley from Climate Energy Finance, and also Chris O'Brien, who is the Managing Director in Australia of Grid Beyond. Um, my name, and I forgot to mention this at the start, is Giles Parkinson. I'm the founder and editor-in-chief of Renew Economy. And so thanks for being here. Look, we're going to have two presentations. We're going to start off with Tim, then we're going to have Chris as well. We also very much invite people to ask questions, because that's really what it's all about. It's about half and half presentation and half questions and answer. Now, there's a whole bunch of tabs that you'll see on the bottom. There's a chat one, which people might have conversations with, but we'd really, if you want to ask a question, please use the Q&A button if you can. That'd be more than useful. We'll have a couple of polls during the session as well. So there you go. So look, without further ado, I'm going to introduce our first speaker, who is Tim Buckley, who could be known or should be known to many of you. He's got more than 30 years of financial market experience covering the Australian, Asian, and global equity markets from both the buy and the sell side perspective. Tim was formerly Director of Energy Finance Studies, Australia, South Asia at IEFA. And before that was a Managing Director, Head of Equity Research at Citigroup for 17 years until 2008. And I first met Tim before I even knew about renewables and the energy transition. So he's very well placed to give a commentary. Anyway, he's the Director of Climate Energy Finance. Tim, you have the floor.
Thank you, Giles, and you're dating both of us. But it's been a pleasure working with you and watching what's gone from pure aspiration to a reality. Thank God, given the climate science is pretty clear to anyone, particularly if they live in South Australia or Victoria this last month. So great to be here. Thanks for having me and hosting, Giles. And I'm just going to give as you said, a quick presentation, 12 minutes or so. As usual, I've got my standard slides to prompt me, and I'll just start with a disclaimer. Climate Energy Finance is a public interest think tank. We have no government or corporate funding, no private advisory work, paid advisory work. So we get to actually brainstorm with virtually everyone that accepts and acts on the climate science. And I have this chart just to remind anyone, I'm not a climate scientist, I'm not an engineer. I accept what the insurers and the climate scientists tell us every single day, that the climate extreme weather events are getting more extreme, more frequent. The cost to all of us is going up, and we need to deal with it. And I'll just start with a global perspective, then, as per usual, for anyone that knows me, a China perspective. Global and China probably go hand in hand when you're talking clean tech. And then I'll come down to Australia and then hand to Chris to talk more about the implications for Australia, how we're tracking, and as Giles mentioned, the technology innovations that are helping us learn real time. But I do try and keep a positive view, particularly given what's going on to the east of Australia. But I'll start with this. This is Bloomberg's new energy finance data saying that the world last year invested 2.3 trillion US dollars in clean tech and grid solutions in one single year, up 8% year on year. You'd never know it reading if you're silly enough to read the Murdoch media. I much prefer Giles's Renew Economy, and up 8% year on year. But you can see China actually, according to this data, declined fractionally. That's just because of the massive ongoing deflation in unit costs. The volumes continue to grow and astound, and I'll come to that in a minute. But also, America continued to grow despite I'll keep the language clean, what's happening in the White House. I'll move on rather than comment there. That's the only American comment I'll make. So again, this is one version, Nat Bullard's chart, but whether it's Ember, whether it's climate energy finance, to me, this is a staggering trend, which is the progressive electrification of everything in China. Pink and black and yellow are the Western economies. We've done bugger all in the last 20 years, 30 years. China, meanwhile, has gone from a global laggard to a global leader, along with Japan, and is progressively electrifying everything. So to me, that's an absolutely key trend. It's absolutely ongoing. It's all about energy security, and it is just staggering. So electrification of everything is the mantra within China. And this chart shows, again, we talk about electrification of everything. One of the key areas that they're electrifying is transport sector. The world is electrifying transport. This is the EV uptake over 2025. You'd never believe it if you read the Murdoch media, but who had probably 500 stories about how EV sales collapsed last year. They didn't. They actually had an all-time record high, only up 20% globally. That's not really much of a collapse, but obviously the fossil fuel vested interests like to set the agenda and the narrative. And that's why I read Giles's work, because he talks about the future rather than trying to hold back and deny the future. So there you go. 2 plugs for you, Giles. Now, a couple of other data points just to remind us of how fast things are changing. Like here you've got, I think this is Benchmark, or not, I think this is Benchmark Minerals Intelligence's data. They're forecasting 15% global growth this year, 2026. In EV sales globally. Europe ended on an all-time high. EV sales across the whole of the EU were 50% share in the month of December. So this trend is accelerating everywhere, maybe other than America. And the other data point, which I find staggering, because anyone that reads my LinkedIn post will know I'm focused on diesel fuel rebate reform, subsidy reform. Why the hell are we funding $11 billion of subsidy for imported, high emissions, expensive imported petrol and diesel, when we could electrify everything and empower our economy and our transport sector and our mining sector by domestic energy? But so why am I emphasizing that? China's electric vehicle truck sales, so that should be new energy vehicle sales. That includes plug-ins and hybrids. But they reached not just 50, it was 54% share in the month of December last year. 50% of all heavy haulage trucks, 54% in the month of December. Now, as usual, there was some stimulus from China, so there's a bit of a policy pull forward there. It might not be sustainable in the next month, but like CATL 6 months ago said we might hit 50% EV truck sales by 2027. China likes to do and then talk about it. And so obviously 6 months after having put that signpost in the ground, they've already now exceeded it. Just staggering. 50% of all EV, new energy, all truck sales, heavy haulage truck sales were new energy vehicles in China. Again, batteries to me, one of the biggest disruptors of 2025. I think it'll continue to be one of the biggest global disruptors and themes in 2026 is batteries. Now, we could use BESS, battery energy storage systems, but we're also seeing that in behind the meter home batteries right now. Minister Bowen is absolutely on fire with his home battery subsidy program. 200,000 batteries installed in just 6 months across Australia, and 4.27 gigawatt hours. Now that was from 2 weeks ago, so that's probably out of date already, or not probably, it is out of date already. But it was brilliant to see Treasurer Chalmers triple down on that program and expand the program to $7.2 billion of funding. So it's multi-year and ongoing, because we know grid transmission costs have just blown us all out of the water. So we need to halve or quarter the amount of new grid transmission we build and instead build batteries, BESS and behind the meter. And I was reading David Leach this morning, and he was highlighting that according to RenewMap, there is 10 gigawatts, 30 gigawatt hours of battery energy storage systems either in construction or in commissioning in Australia, in just the NEM. That ignores WA, which is another 20 odd % of Australia. And so that we're going to see a 3 to 4-fold expansion in battery energy storage systems in Australia by the end of next year. The same trend's happening in China, it's happening in Europe, it's happening in America, it's happening, it's going to happen globally. So just a boom in battery energy storage systems. And of course, China setting the tone by building capacity ahead of need and driving prices ever downwards. Now, that we can come back to the geopolitics of that. It is problematic, but at least they're investing in the future. Not at least they are. Another one, just to show it's not all about China. This is a brilliant chart from Ember's recent report highlighting that India is absolutely finally jumping on board with this. I was tracking India for a decade. Modi certainly understands the importance of energy security, the opportunity for made in India. And so they're bending the curve. And the Indian economy is very different to China. Like services are 60% of GDP. So there's nowhere near the energy intensity. So brilliant to see India and China both had down years in calendar 2025 for thermal power generation, and shows, notwithstanding the denialism of the fossil fuel industry and their puppets, the transformation is going to happen. It has to. The science says it has to. And fortunately, there are countries like India and China and Europe and Australia getting on with it. Again, Chris will come back to this in a lot more detail, but everyone knows the duck curve, but this is a different version of it. This is how much energy is being absorbed in the Californian grid during the day and then put back into the evening peak. So I think it was David or Giles who coined the phrase solar is eating coal's lunch, and now batteries are eating gas's dinner. No denying that. It's just amazing to watch the impact of batteries. And as David said, as AEMO said in their quarterly energy dynamics, it's driving wholesale prices down. It was brilliant to see the fourth quarter, the headline of AEMO's report last week saying wholesale prices down 45%. Because peak renewables. Now, just quickly on China, no talk I ever give can't address China 50 times. These numbers, everything about China for 15 years has staggered me. Everything. It's just amazing, the scale. It's impossible to actually get your mind around how big, how fast they move. There's China speed, China scale, but have a look at that. 446 gigawatts of renewables added in just 12 months in China. Ted O'Brien, eat your heart out, like 2 gigawatts, 1.7 gigs of nuclear installed, 446 gigawatts of renewables installed. So nuclear is a rounding error, and that is in China, where China is the world leader in deploying nuclear. So a rounding error relative to renewables, even though China is pursuing an all of the above strategy, nuclear is just bloody hard to build. The other number that really I was delighted to see in December was this 37.4 gigs of wind in 1 month commissioned. China about 6 months ago talked about installing 120 gigs a year for the next 5 years of wind. Sounded aspirational at the time because the whole world had never done anything like done 117 gigs last year, and China just did that that was 2024, and China alone did it in 2025, 119 gigawatts in 1 year of wind, and they've said they're going to do that each and every year. And again, in terms of the climate science, beautiful to see China's thermal power generation down 0.7% for the year of calendar 2025, bending the curve. So it's not that coal has peaked as in terminal decline yet. It's nowhere near fast enough. It's definitely plateaued. It's definitely going to level down slowly, plateau and decline. And in other words, zero emissions energy is more than making up for all of the energy growth, electricity growth in China. And that's where the importance of electrification of everything, because electricity demand in China grew by 5.3% year on year, so faster than GDP, as they reduce their addiction to imported oil. And from a climate science perspective, this is from Lowry's CREA work, and in Finland, it's just beautiful to see this chart being updated. China's emissions nationally peaked 18 months ago. Probably more than that now. This chart's 2 months old, 20 months ago in March 2024. So 6 years ahead of schedule. Steel demand was down, cement demand was down, thermal power demand was down. Great to see. So 6 years ahead of their nationally determined contribution. China likes to do and then talk about it. And then final two slides. Australia, we have passed 50% renewables. AEMO uses slightly different data to open electricity, and but either way you cut it, whether it was 50.1% nationally for Australia or 51% nationally for Australia, according to AEMO, but certainly renewables for the fourth quarter of last year exceeded fossil fuel generation. So brilliant to see. January, only 49.1%, but when you look at it, it is tracking up dramatically. It was only 39.3% share in January 2024, so a near 10% share gain in just 1 year in January. We've now got to get to 82% by 2030. We've still got 5 years. China would probably do that in 2 months, but we've got 5 years to do it. It is doable, but we need to go twice as fast as we're currently going. Last chart, and this will segue into Chris's work. Again, using AEMO's data, the green line is total demand and the purple line is on-grid demand. And so obviously distributed consumer energy resources, batteries, rooftop solar are making all the difference. And again, deflation, and I'll finish on a personal note. I just had a massive 32 kilowatt battery installed in my house 6 weeks ago. Should have done it years ago, but took advantage of Minister Bowen's subsidy program. And I was just looking at my January data. I was 100% self-sufficient thanks to my solar and my battery for the month of January 2026 on a net basis. On a gross basis, I was 80% self-sufficient. And so my power bill is going to drop by 80 or 90%. Unlucky origin. So, Chris, over to you.
Well, thank you very much, Tim. Before we do move to Chris, just to remind people that if you do have a question, please use the Q&A tab. We've got 6 there sitting in the queue at the moment, and there's a lot of chat, which is great. But I won't find your questions in there because there's a lot of good chat in there, and it's good to see that people are yes, having a great discussion. Sam, I think, or Tanya, can we have the first poll question? We'll get this done before put this up before Chris starts. Do we have that? Our first poll question. Here we go. Are you considering installing batteries for your business? Single choice. Yes, no, already have. It is very much a sort of a business question because I think that's the subject that going to go on to now. So look, without further ado, Chris O'Brien, thank you very much for joining us. You're going to be drilling down further into this, particularly on distributed energy and the demand side and the flexibility. Chris is the Managing Director in Australia of Grid Beyond, who are sponsoring this webinar, and we thank him very much for it. And please take the floor, Chris.
Thanks, Giles. Thanks, Tim. Great presentation. So kicking off from our side, as many of you are aware, Grid Beyond published an annual Global Energy Trends white paper that discusses some of the key factors influencing the energy transition, some of those narratives that Tim touched on as well. But the Australian piece of that is a white paper. It's about 30-ish pages that touches on the energy market dynamics locally here in Australia. I'm going to just touch on a few of those key points, but I recommend you get in and get your own copy of that white paper. You can jump onto the gridbeyond.com/insights website, and it's available for you to download there. What I'm going to be touching on today are what I see as the major influencing factors on the energy markets in the short to medium term in Australia. So the growth in the system demand, the changing energy mix, and energy price volatility. So together, these three factors are changing the dynamics of our market and driving large energy users to explore new ways of thinking about their electricity for their sites. So as a starting point, and something that Tim touched on, there's an increasing underlying average demand in the net. We saw that between 2022 and 2025, operational average demand was quite flat, 19.5 to 19.8 gigawatt. However, underlying average demand increased from 22.5 to 24. And as you saw on Tim's slides, the delta between the underlying and the operational demand has been substantially supported by behind-the-meter PV. Moving forward, there will be limited opportunities for PV behind the meter to soak up the increasing underlying demand in the system. And that's largely because of where those increases are coming from. There are many demand drivers, but just to call out a few that are unlikely to be fully offset by behind-the-meter PV. Probably one, electrification programs for both residential and C&I as they move away from gas. That's a very large demand increase across the economy. Probably number two is the continued uptake of EVs. We know that buyer behaviour or owner behaviour of EVs has the majority of those EVs charged at home in the evening during peak times. And number three, of course, there's data centers, and you'll see that on this slide. So data centers are a good example of new demand that has a limited opportunity to offset its demand behind the meter with PV. They're a very tight footprint. So operational demand is being driven by the electrification of key parts of our economy. This in isolation is a major change. However, it's also occurring at the same time as a changing energy mix. So Tim teed up the changing energy mix with that crocodile chart that you saw towards the end of his presentation. Here's the high-level view on the right-hand side of this slide. You can see that crossover that Tim demonstrated in the bubbles on this chart, where renewable or intermittent generation is now overtaking baseload or dispatchable generation as a percentage of the overall mix. Forecast suggests that this intermittent generation will build out and leave traditional dispatchable generation in its wake, with coal dropping out of the system over time, as we know. Whilst we are doing a reasonable job of building out new energy resources, including generation, storage and firming, what is clear is that traditional supply side thinking is behind many of the challenges that we're facing today. As with all challenges, it is also creating opportunities for the savvy energy user. More on that a little bit later. So and one of the challenges that I was referring to there is price spreads. So our transitioning energy system is creating higher highs and lower lows and more regularly. Most followers of our energy market will have seen the news that average wholesale prices have declined in the last half of 2025. This is really good news. However, energy prices for large users are not determined solely on the average wholesale prices. Energy prices reflect wholesale risk, and volatility is risk. So energy prices continue to increase despite the softening in average wholesale energy prices. And volatility is a key reason for this. Whilst volatility impacts price takers, volatility also creates opportunity for an increasing cohort of large energy consumers. That growing opportunity is reflected in the forecast growth of consumer energy resources expected to be built out behind the meter. So many of you will be familiar with this capacity by year chart from the ISP. I've taken that chart here and shown on the right-hand side the exploded view of behind-the-meter battery capacity forecast by AEMO. We expect by mid this year there'll be 2.3 gigawatt in behind-the-meter storage on the NEM, with 1.4 of this being passive, that is not visible to the market operator and not able to be centrally controlled. In 5 years' time, we expect a total of 6.6 gigawatt of behind-the-meter storage to be deployed. 3.7 of this is expected to be able to be coordinated and therefore visible to the operator and dispatchable. So couple the growth of storage behind the meter with the wholesale price volatility, the increasing energy prices, and this adds to the opportunity for large energy consumers to develop strategies that not only mitigate increasing energy prices, but also allow them to generate additional value for their businesses either in the market or by timing the market. So in summary, what's emerging now is a system where demand is no longer passive, it's dynamic, digital, and distributed, as Giles said at the start. And that's where we come in. Grid Beyond provides the platform on which value is created both behind the meter and front of the meter. We've developed the tools for large energy users to take back control of their energy costs, leverage the flexibility in their loads, and maximise the returns on the other assets such as battery storage and generation. So consumers that adopt Grid Beyond technologies are becoming active participants in the energy market ecosystem. And our technologies are built on a suite of digital tools to complement your day-to-day operations, tools that forecast energy prices and tools that optimise, whether it be through decisions to ramp or to modulate or charge or discharge or curtail or export, all considering your load and production plans. And where are we doing it? Well, we're doing it across the globe. We're doing it in the major deregulated energy markets. We started in Dublin in Ireland in 2010 and have expanded into deregulated markets in the US, UK, Japan and Australia. Our key strategic investors are ABB, Yokogawa, EDP, Constellation Energy in the US, and most recently, in fact, only in the last week, we welcomed an investment from Samsung. So this is my final slide, and it touches on some of the companies that we have our technology deployed with. You can see it's a who's who of large energy users that include cement manufacturers through to cold stores and EV charging platforms. I put this up for you to see some of the industries that we've assisted in creating value. My team and I are based in Melbourne, and we'd love to talk to you about anything that I've thrown up there today, any thoughts that you may have. Thanks, and I'll hand it back to Giles now for questions.
Thank you very much, Chris, and thanks everyone for listening, your chat and your Q&A. We're going to go start these Q&A pretty soon, but we might just get the results of our first poll, if we can put them up there. Here we go. Are you considering installing batteries for your business? Single choice, yes. 31%, no. 37% already have 21. Well, there you go. 2/3 have and are about to, and 1/3 not. It'd be interesting to know about the circumstances of those who are not doing it, but they might be quite unique and not able for whatever reason. We have one more poll question, so maybe we can put that up, and we'll give you the answer to that halfway through. Are you on an energy retail contract or are you spot exposed? Energy retail, spot exposed, just two answers there. There you go. Hey, look, we're just going to go into some of the questions. I'm actually going to start off with some of the ones which Tim's been very busy answering some of them, but some of them are actually so interesting. I wouldn't mind sort of bringing them back out to the public forum. The first one is, will it be recorded? Yes, it will be recorded. It is being recorded, sorry, and it will be published on the YouTube. So if you have to, for some reason, disappear to lunch or whatever, or you want to listen to it again, it will be up on our website later on. Chris, this is one for you. Tim's already sort of answered it. It's because I was just fascinated by your explanation of what Grid Beyond does, and particularly sort of in the cities, all the different buildings. And our first question was about the role you see for city block scale microgrids as national security assets. I'm just wondering what the thinking is about that. It's sort of, I don't know about whether about national security assets or just as little microgrids in the city. Are we going to see that?
Yeah, I think we already see a version of that with embedded networks. We see these embedded networks that have their own generation storage behind the meter and a separate billing structure. There is also always a requirement for those guys to, especially when they deploy storage or generation assets behind the meter, to be able to interact and gather value from the markets. And really, that's where our platform comes in. And we are seeing more and more of these microgrids or large clusters that are being lumped together in networks. Yes.
Yeah. Okay. Another one here, which has been answered in the online, but from Tim. Tim, if you want to open your microphone too. I just thought this just deserved a broader, because there's a few questions about this, about whether batteries got enough money in the last quarter when they had a particularly big role in the management of the grid. And also just about the sort of the negative prices and things like that. And you sort of answered it, and maybe you can just amplify verbally. One thing I want to point out is that, there's a lot of said about battery storage and whether they are making money. Batteries can do lots of different things. A lot of the batteries which are currently out there are possibly getting paid to do other things, acting as shock absorbers or virtual transmission or solar soakers over in Western Australia, specific tasks. So that's where they get most of the money. And we're also seeing batteries are becoming part of portfolio for large-scale generators, if you think about Origin, AGL, and Energy Australia. So they don't necessarily want to make money out of that every individual asset. They sort of see it as making their whole portfolio more efficient. So it might be, yeah. Anyway, Tim, you got any thoughts on that?
Yeah, sorry, third plug for Renew, but I read with real interest Giles's write-up of Brookfield Renewables investor call, which Giles spent his weekend writing up. It's on Renew Economy's website. Brookfield's one of the most astute infrastructure investors in the world, one of the largest infrastructures investors in the world. They bought Neon Energy, one of the biggest battery operators in the world, in the Western world anyway. Last year, they spent $10 or $11 billion. And when asked about it, the CEO of Brookfield Renewables said that he thinks battery installs are going to accelerate. It's going to be a major area and it's booming. I mean, read Giles's very exactly his words, but it's coming faster than anyone expected. When BlackRock talks about renewables, they own Acacia Energy. So again, one of the biggest investors in batteries in Australia, in the world, outside of China again. And last time I checked, BlackRock's got, I don't know, 15 billion Aussie dollars. Sorry, wrong number. trillion, $15 trillion of assets under management. I think they know how to calculate whether or not they're going to get a rate of return acceptable for them. But it is an important question. But at the end of the day, I just follow the money, and the money is flowing into batteries. The problem we've got at the moment is not enough money is flowing into the construction of generation to power those batteries, which means the battery operators are going to benefit from peaks and troughs, and so they get negative prices when the sun is shining, when the wind is blowing, and then they get to sell it up to $20,000 a megawatt hour when there is no solar available. And so we have a price only market in Australia, which means the battery guys are making a lot of money. Now, I'm just making a statement there because the reality is, as I mentioned, David Leach talked about 30 gigawatt hours of battery energy storage systems just in the NEM. So that's 40 gigawatt hours across Australia that's going to be commissioned in the next 2 years. Now, that's probably 20 billion, 15 billion, maybe 10 billion, given the amount of deflation going on in batteries. $10 billion. I think that people have done their numbers. So I'm pretty confident. I know my electricity bill is going to zero thanks to my investment in my battery. Now, sure, Minister Bowen just subsidised 30% of it with our taxpayer money. But what it avoids is the point that was also made in the chat. We should be rolling out batteries as fast as we possibly can and distributed energy resources, because we can't afford to build new grid transmission, greenfield grid transmission, because what we thought was going to cost $2 billion now costs $10 or $15 billion, and it takes 10 years to get it through, thanks to morons like Barnaby Joyce, who have whipped up a frenzy of hostility to it, and undermining the climate science, undermining the transition, in other words, serving the fossil fuel vested interests that fund him, as we saw in the AFR yesterday. Fossil fuel money was all over the federal election, and we should have real-time transparency so that the LNP can wear their sponsorship jackets and the ALP can have sponsorship light jackets, because last time I checked, Santos still sponsors the ALP as well. Hence why we've got a gas-led recovery crap like that. Anyway, I'll stop there, Giles.
Okay. Thanks, Tim. Chris, I'm just wondering if I can just throw the battery question to you too, sort of maybe not from the supply side idea, but from the sort of the demand response part, because they're playing an integral part of how people manage their bills, particularly the big customers, how they can do that, mixed in with smart controls. So I guess it's not so much how much they can earn doing things on the grid, it's how much they can actually sort of save, as it were.
Yeah, that's right. And I think I sort of alluded to that in one of the comments I made about timing the market. If you can understand what energy prices are going to appear at what time during the day, and you're spot exposed, then you have the ability to ramp your production up to avoid it, and ramp up to take advantage of lower prices, and ramp down to avoid the high prices. So when you put a battery in, that becomes essentially a shock absorber between between those two, and that gives you even more benefit. But there are benefits just in being price responsive to market prices. And if you're not on spot, you can also participate in the demand response market. So there are potential ways to participate in markets and create value without having batteries. Although batteries gives you a little bit more in terms of features around resilience and stability that you might want for your own commercial or industrial operations.
Okay. Another question that was put up quite early. This comes from just referencing the Denmark Community Wind Farm, which pioneered grid integration of small-scale wind at the distribution level to match local demand and network capacity. Can the panel please comment on the network-wide potential for integration of fit-for-purpose utility-scale wind, solar, and grid-forming storage to deliver the essential system services, stability, network resilience, and what work is being done at national and state level to accelerate the integration of these technologies into existing distribution infrastructure and using bidirectional islandable network architecture. Just to preface before anyone replies, is that It's one of the big questions is what batteries can do for the grid. And AEMO are going to be doing a important trial this year, scheduled for this year, 100 megawatts. It's going to be the first time in the world that we're going to see an islanded grid as part, or an island part of the grid, running with no fossil fuels, engines off, and it's going to be really a very important guide into the future of our grid, and give them, I think, the confidence they need to say goodbye to coal and a lot of gas. Anyway, Chris or Tim, have you got any thoughts on that one?
Yeah, I'll kick it off, Tim, and hand over. I think batteries are the key. Like I know your question was based around generation with the wind farm connected into the low voltage network. Batteries are the key without a doubt. I think one of the challenges is some of the market structure here, where the DNSPs have a regulated asset base. However, if they put one of these batteries in, they are excluded from participating in the market in generating revenue, because that's not the core business. So there's some structural challenges that we have around DNSPs really rolling this out widely. I think it'd be a great initiative for them to do that, because if we think about your street, my street, where we've got 30 or 40 or 50% solar rooftops, during the middle of the day, we're forcing energy back up that low voltage network back through the transformer in a negative route. And that is aging those transformer assets prematurely, and costing the DNSP money. So being able to soak it up at that low voltage level, and deploy it as well during evening peak times where the whole grid has the potential to be overloaded, is a great opportunity for the DNSPs. But there are some challenges in getting that working correctly.
Okay. Tim, do you want to briefly add to that?
Yeah, maybe, as Chris said, there are some challenges in actually implementing a total system revamp live while we're running the grid, while it's now starting to grow thanks to electrification of everything. But there are technology solutions. And to me, one of the key questions in the discussion was, well, lower wholesale prices, when does that feed through to retail prices? Isn't the grid cost going to go through the roof? I think batteries are brilliant at actually reducing the investment we have to make in grid expansions, which then means, and the more volume going through the same grid means lower prices, the more batteries means we can avoid or defer some of the grid expansion. I still want to see interconnectivity across the states. I think that will enhance grid reliability. It will reduce the need for long duration storage. It'll buy us some time for debacles like Snowy Hydro to finally get built. We'll be funding them for the next couple hundred years, but batteries are fast to deploy. The technology is going dramatically upwards each and every year, and cost is coming down. So ultimately, it's all about leveraging the existing grid. And as one of the questions was saying, I'd love to see more smaller projects, infill projects, leveraging the existing grid. I think New South Wales led the renewable energy zone. I think that's actually become really problematic. We need to actually defer some of the renewable energy zones, because when they're costing 10 or 15 billion dollars each to come online, and when the approvals are being prioritised in the renewable energy zones that aren't ready to be energised, we're actually slowing the transition down because of it. I'd love to see batteries and solar, and I think that'll be one of the themes of 2026, where hybrid solar battery developments leveraging the existing grid deliver more electricity. They can be built in 18 months, hopefully less, using robots, maybe, if not backpackers, and we can actually get more generation into the system faster, and we can get off our addiction to imported oil, which is costing us $50 billion a year, and the bloody government is providing an $11 billion subsidy to keep our addiction to imported fossil fuels. Not
Okay.
there, Giles.
Thank you, Tim. Okay. And just on that distributed network and solar battery hybrids, that has been a newly emerging theme from the New South Wales government, which has probably got the biggest task in terms of you're thinking about the number of coal-fired power stations that it needs to replace in the next 10 years. Quick question from some people asking where that 100 megawatt islanded grid is going to be, Giles. We haven't been told yet by AEMO, but think of somewhere 100 megawatts is a reasonable amount. So you need a few big towns, you probably need a bit of industry, and you need a lot of wind and solar and some batteries. So if you can find somewhere on the map that looks like that, then that might be a place where they might be going. But they haven't told us where, and I think they're probably sort of mulling their options. Let's go back to that second poll just to get an answer for that one. Sam or Tanya, if we can have it. Oh, there we go. Are you on energy retail or are you spot exposed? Well, there you go, energy retail, spot exposed. I guess that's to, well, it's interesting. If we're talking about sort of consumers, I think it's interesting that we've got 16% spot exposed. That's probably people I think would have batteries because they can manage that exposure. And that's because we're now getting new retailers in who are starting to think differently about the game. And that takes us back to another question, Tim. There's been a couple of questions about CER and the 3 hours of free solar or free electricity in the middle of the day. You know, there's questions about cross subsidies from CER adoption. There's questions about that Bowen initiative on the 3 hours. There's been some debate in the sort of professional circles about whether that's a good thing, overreach from policymakers and regulators and what have you. Reasonably briefly, we'll get your thoughts on that, and then maybe from Chris. Yeah.
Okay, I really like it as an idea, and of course, Origin AGL don't like it because they actually have to do something different. They actually have to service their customers. But at the end of the day, why I like it is that I'm rich. I own my own house. I can have my own solar. I can have my own battery. I can have my EV charging in my carport. We have to worry about the bottom half of Australia, all of our kids included, who actually don't own their own house, and because of the housing shortage, probably never will, and the stupid cost of housing. So we actually have to bring 100% of Australia along. So we can't just to me, I get the subsidy. I don't need a bloody subsidy. It's our kids that need the subsidy. They need to have their cost of living. And so when we talk to the federal government, Albo is totally fixated on the cost of living. Jim Chalmers is totally fixated on the cost of living. So we've got to solve it for the bottom half's the wrong word. The people who, not the old people
Well,
that own their own homes. We've got to bring
yeah.
everyone along.
Yeah, and I guess that's what it's trying to sort of design to do. I mean, politically, it's a really interesting one because it does actually sort of deliver at least that prospect that all the other things that are happening in the grid can be accessed and can be benefit to all consumers. Chris, I'm just wondering whether you've got a thought on that because it does speak to me. I mean, like, you know, there's lots of questions about the practicality of that and about network charges and how you do that. I mean, that's really just the details. I think what we need here probably is just sort of provoking a bit of a rethink about the way we think about the structure of bills, the structure of the grid, the structure of, you know, the whole theme of this webinar about, you know, thinking about demand side and flexibility rather than just the supply side.
Yeah, I think the 3 hour free period in the middle of the day is a great idea. If you actually look at the system load during the middle of the day relative to the PV production, the renewable production, you know, it's the right opportunity for smaller consumers to be able to take that energy off the grid, actually do the DNSPs a favour in taking some of that energy. And I think it's probably going to trigger more and more distributed batteries going in behind the meter. And this is obviously why Origin and the big boys don't like it, because if you can fill your battery, whether it be 13 kilowatt hour in the middle of the day for nothing, you're not really going to be spending in the evening either. So it's a great initiative. There's already retailers here that are doing it, and I'm sure you guys know that. There's a couple of retailers offering the 3 hours in the middle of the day, and I've seen some of the exchange in the chat around Amber. one of the guys that works on our team here, he's an avid energy watcher, as you would imagine in our industry, and he's quite often spruiking his $25 gain in a day by pushing the energy out of his battery at peak times. So I think it also drives engagement. You know, when you do have that ability to engage with the energy market as a retail consumer. So I think the more, and this goes to Tim's point about bringing people along, the more we can come up with schemes that have people engaged and support them in their deployment of energy resource, you know, behind the meter resources, the better off we're going to be in this whole transition.
Yeah, I'm just looking at some of the chat. Kelly Court, hi Kelly, talking about solar soaker and just pointing out that Tim's just replied online as well. Agreed. You know, you might get free electricity in the middle of the day, but watch out for what they charge you in the evening peak. And I actually had a look at one of the existing offers because they do actually already exist. There's one or two retailers do that, and yeah, watch out for those evening peak prices because they'll blow you out of the water. And on that as well, someone, anonymous attendee, asks, what do you think of the chances of this being extended to Victoria and WA? I think the chances are probably quite strong, but that's in a different hand because it's a different regulator. And we do know that Victoria have asked their regulator to look at it. Western Australia is a slightly different case. Another question from Anne Chris for you. How can we remove the challenges for the DNSPs, Ray batteries in front of the market? I presume meter. We have had experience with the community-owned LV low voltage BESS. I guess all this comes down to sort of network charges and things like that. I might be wrong, but have you got any thoughts about that, about batteries on distribution networks and how, you know, some of the barriers, I suppose, to...
Yeah, I think it comes down to selecting the right location for your community battery. You know, we're working with developers all the time that you know, one of the first pieces of information they have is how loaded that piece of the network is and what sort of capacity is available for their connection. The challenge is always that when you put a battery on, the distribution network see it as a load. As much as it should relieve some pressure, you as the battery owner have the ability to charge during peak times. Now, why would you? I'm not sure, but because the cost would, you know, prohibit it really. But because you can do that, the DNSP see it as load. So the connection challenges are real, and that's one of the first things that you need to look at when you're planning where to put them.
Yeah. And Tim, there's been a lot of questions about negative prices. We might just have one more little tackle at it. Joel asks about one thing I can't get my head around is whether negative prices in the middle of the day will continue over the next 5 years. Keen to hear your thoughts and the impact of that. One thing I'd like to point out, Tim, if you don't make that same point, is that negative prices are usually driven down by the coal-fired generators who are remaining on the grid, mainly because they don't want it to be switched off. And I think actually Origin or someone, no, it was Morgan Stanley actually did a good report about what it costs a coal generator owner to switch off. Now, some of them are thinking about this. AGL has tried two shifting, which is just basically switching a coal generator off for two shifts in the middle of the day so they don't have to bid negative and pay other people to take their power. But for the remainder of the people, not technically possible or very difficult with their generators because a lot of them are really, really old and not very flexible, and they would rather pay people to take their energy rather than and so they're the ones pushing the prices down, and that forces a lot of wind and solar off the grid, particularly if they don't have batteries. Tim, negative prices, people seem to be scared of them. I don't think it's a bad thing. People sort of say, oh, this is a failure of the industry. It's really just another price signal for more investment in batteries and demand over supply, or supply over demand, sorry.
Yeah, exactly, and constraints on the grid at the end of the day, but it's not hitting the consumers direct. It's a wholesale price signal, and we are a world leader when it comes to variable renewable. South Australia is a world leader when it comes to variable renewable energy penetration, and one of the drivers is a price only signal. We're not having to carry a massive capacity cost, although all of our retailers are trying to increase our daily charge so that they can protect themselves and still get into our wallet even when we're not getting any service from them. I like negative prices because it incentivizes batteries, it incentivizes renewables. But as you say, when we're relying on 40-50% of our electricity from coal, and the coal plants are 40 or 50 years of age, they're not designed for flexing, as you just said. And whereas in China, a key point is China is building brand new flexible coal-fired power plants, knowing that they're going to, and they actually only just yesterday increased the fixed tariff that they offer to coal plants because they want them to run 40% of the time, because they don't want to use imported expensive methane gas from America. And so they don't have domestic gas. So they're saying, well, until we roll out batteries at 10 times the current run rate. Now, okay, China leads the world in rolling out batteries, but they actually need to lift it 5 or 10 times to accommodate how much more solar they're putting into the system every year. Because you need about 3 or 4 gigawatt hours of BESS for every 1 gigawatt of solar you add each year, and China's adding 315 gigs a year of solar. So you're talking about 1,000 gigawatt hours of BESS per annum from China for the next 20 years. It's just astronomical. Now, they'll do it. They have the capacity, they have the inclination, they want the energy security. But negative prices, at the end of the day, it's a signal that incentivizes batteries, and it's a reflection of the fact that, as you said, our coal plants are inflexible. Origin just spent $80 million making Eraring, a 42-year-old coal-fired power plant, more flexible so they can turn it down to 20 or 30% during the day, as you said. And what they'll probably end up doing is turning it off during summer and leaving it for system reliability so they can make money during the winter, but not have to run an expensive loss-making coal plant during summer. But as you say, it's a reflection of we're trying to change the grid, rebuild the grid as we're flying the plane, and we're flying it bloody fast. We need to fly it twice as fast, but I like the price signal. Nothing like I'd love a price on carbon pollution, but we don't have that yet. Let's get that in the Safeguard Mechanism review of 2026.
Okay, fair enough. Chris, one back to you from Graham. We've been talking a lot about batteries and things like that. Let's just remind ourselves about demand response and flexible power without the double handling of BESS, Graham suggests, e.g. chiller beams, charging, desalination, crushing and grinding rock for mines, making hay while the sun shines, he says.
Yeah, the demand response markets have been the traditional activity for Grid Beyond in Australia up until really this year. Demand response, the problem with demand response is it's very shallow market, and it's not getting any larger at the moment. So the price, as more and more batteries come on, they sign up for these demand response markets. So you're just continually adding supply, and without an increase in demand, the prices just tank. So really, demand response is important from a flexibility standpoint for a production plant. If you're a cement manufacturer, you want to be able to curtail your energy use away from high price periods and ramp up production when prices are low. Most of those guys are very large users, therefore spot exposed. So, what we're thinking about is demand response needs to become smarter. It needs to become non-binary, whereas what we've had in the past with the frequency control markets has been a binary response to a signal put out on the grid.
So you're talking there about sort of market design really rather than the technologies.
We're quite happy with the price-only market as Tim described it, because it gives the volatility for us to be able to demonstrate value in moving some of your loads around a little more. So it's not so much the market design; it's more updating the thinking of these large producers on when and how they use energy.
Yeah. It's interesting, actually. We've seen a lot of reports. We've been writing a few stories about what's happening in some of the off-grid situations, like mines. You've got gold mines now, which are running on sort of 90% renewables, averaged over a month or even a quarter, running for days, 100% renewables. And they're now starting to think more about Well, I guess just managing that, when they use their facilities, when they run their processing plant, when they charge all their vehicles that they're going to do, the electrification of their vehicles. And you're going to see this on a massive scale with Fortescue, with its goal of real zero in the Pilbara mines. I mean, that's an extraordinary target when you think about it. I mean, so is it really just about, it really just comes down to the thinking of the people, of the customers themselves.
and and designing your behind the meter systems to be flexible enough to ramp and modulate.
Mm,
If you think about your whole site as an entity where you've got generation, you've got storage, you might have different types of loads that are non-flexible, and then you might have flexible loads. Is mapping all that out and creating a digital twin of that site so that you can effectively modulate energy consumption to create value, either
yeah.
with the market or just behind the meter.
Yeah. And Tim, maybe just to sort of finish off with you, I mean, I mentioned Fortescue. I mean, Andrew Forrest has been very sort of vocal. He's been over in Davos saying, in the fossil fuel industry, a bit like your line as well. But just what he's going to try to achieve in the Pilbara, and look, whether he gets there by 2030 or 2031, I think he's going to give it a fair shake for 2030. This is really quite fundamental because, like some of the smaller mines are showing, this is basically the grid on a smaller scale, still a significant scale in the case of Fortescue. We're not far from the sort of the proof of the pudding, if you like.
Giles, that's right. But we do need to think China speed, China scale, and we don't have the systems, the capability, the belief in our own ability to do it. Whereas China builds 10, 20, 50 gigawatt systems in their sleep every bloody month. If I would love to see, and Twiggy's going to do it, like you look as you've written up, he's partnered with XCMG of China, Longi of China, CATL of China, Envision of China. Envision's going around the world building these industrial hubs, and they can be powered by renewables. And we need to think about China. Cost of capital is half the cost of capital in Australia. So at the end of the day, we've got a great financial system. We don't have a price on carbon. China doesn't need that. They're a command and control economy. We do for mobilizing finance. But I did take some interest in BHP outsourcing $2 billion of their Pilbara energy infrastructure to BlackRock last month. And BHP doesn't want to have renewables on balance sheet. They see it as low return, low risk infrastructure assets. They want high risk, high return mining assets. Rio said the same thing. So fine, give it to a financial player who knows how to manage money, knows how to manage infrastructure, and has a different risk return profile. And that's what BHP doesn't have the balls to do it themselves. So they're actually.
And who knows the price of diesel, basically, and the price of solar and batteries.
Well, the trouble is Chalmers is subsidising the diesel, the imported.
Well, that's the point. Exactly. Yes. So I'm talking over you, Tim. We're just out of time now. I really just want to thank Chris and just maybe just any final thoughts, Chris. It doesn't have to be very long, but yeah, any final thoughts of this? What?
No, just to thank you and Tim, Giles, and the Renew Economy team. We see this as a great forum, and you do a great service for our industry.
Well, I wasn't fishing for compliments, but I'm very glad I got one. So thank you very much. And thank you very much, Chris. Thank you very much to Grid Beyond for bringing this webinar here. Thanks as well to Tim. And thanks to everyone who turned up. There's a lot of people here, and we really appreciate your time and attention to the matter. And we'll see you sometime soon in the next webinar, or even online or via our newsletters. Thanks very much, everyone.